Good afternoon, everybody. Chris with Realty Medics here with the Q1 market update. Going to go and get the PowerPoint started. All right, so median sale price sitting at 360. It's up 2.9% compared to January of last year, but it's down from 367 in December. Inventory's up, currently sitting at just over 8,200 properties. It's increased 8 of the last 9 months. Not necessarily a big deal. It's kind of good for where we're at in our market. We're not to a seller's market yet, but not necessarily a bad thing. Mortgage rates are climbing back up a little bit, currently sitting at 7% today. We saw them drop as low as 6.61, 62 in December and January a little bit, and then they started to climb back up. Days on market's up, currently sitting at 57, which is up from 49 last month, up from 41 in August and September. It slowly climbed since August, pretty much. Properties under contract, 2361 in January, which is up from 1,500 in December. Again, if you look at the charts compared to last year, we are seeing that normal return to the cyclical sale price where it goes down through the holidays, up through the spring. And we saw that again in January. If you look at January last year to this year, we are seeing some normal return there. Again, looking at interest rates, they went down in January, coming back up a little bit. Not great. But when you look at the volume of the sales here, it spiked. Rates going down, projections. Looking at end of Qs, where they're at, I really think if the rates keep going down, we're going to see more people buying. We saw that spike in December and January when the rates started to come down a little bit. Forecast for end of 2024 varies a little bit. But if you look at 2025, pretty much everyone's expecting them to be in the 5s. It's just a matter of, when we get there. So interesting thing I want to talk about. Last few months, Jason and I have had quite a few sales calls with owners who have short-term rental properties that they bought in the last 12 to 18 months that are looking to transition in the long term. There are a lot of properties down in what's called the Triangle. There's some major roadways south of Disney, a lot of short-term rentals. A lot of people bought properties down there for investments. Currently, there's over 1,800 of them for sale, and that's a lot of properties, barely a 5-mile radius. So I think it just kind of touches on how a lot of people were late to investing. They bought properties for short-term off of inflated tourism numbers post-COVID, end of COVID, after COVID. I think it just highlights the importance of making sure you're planning. If you're looking at buying a rental property, if you're in the short-term market, make sure you also do a long-term analysis, because a lot of those people are struggling now and they're not covering the mortgages because they're not seeing those mid-COVID, post-COVID inflated numbers. All right, so let's talk about the rental rates. We know through the winter, it slows down. Nobody's really moving. Rental rates across Orlando are down $54 from January, down from February of last year. Rentals are up almost $500 for the Orlando metro. Not necessarily a bad thing. It's important to remember, 8% of leases expire in January, 9% of them expire in February. So the spike isn't necessarily a sign of anything bad. Ocala's up $27 from January. Active rentals up a little bit too. Same thing. Palm Bay rental rates are up a little bit, $24. Days on market is going down. Across portfolio, we're seeing days on market around 20 days right now, which is down from the 30, 31 we were seeing through the holidays. So those are all solid indicators for where we're at. Rose Kemp, president of Aura, closed out 2023 with the healthiest market we've had in years. Made both buyers and sellers optimistic for 24. Rates began to fall. Sellers are happy with the equity they've earned. January data shows a spike in new listings, as well as many buyers and sellers who've been waiting. Again, I think it's really tied to we saw the closing spike when the rates went down. The contracts spike when rates went down. So I think it's an indicator of what's coming this year for the house prices and appreciation. We'll continue to monitor the inventory, but as long as inventory stays at a normal level, we don't have an abundance of houses, we should still see some positive appreciation once those people do start entering the buying market. If you guys have any questions, want to learn anything specific, let us know. Just to reiterate, days on markets, we're seeing it start to come down, last 4 to 6 weeks. Rental rates, they did go down. It's important to remember that they have been going down since last year, that there was a really big increase. It's important to remember that. So if you have a property that's coming up for lease renewal, or you have to renew with a new tenant, don't forget that you had some inflated rental rates. The market has shifted. We've seen some owners have properties sit on market for way longer than it should because they were trying to get those same rental rates that they got in summer of July 2022. We're not there right now. So react to the data, shift with the market, and don't lose money for property sitting too long. Anything we can do, give Jason or I a call. Have a good one.